Welcome to your next edition of Highlights, Key Trading and Active Investing Strategies. And there's a Japanese proverb that says, knowledge without practice makes but half an artist. And with this in mind, what we're going to do, and for those of you who have our educational resources, you know we have a lot of these, what we call chart challenges. And it's a great way to kind of confirm your knowledge and reinforce your candlestick education that you get from us. So with that in mind, let's look at this chart. Okay, first question is what patterns are at 1 and 2? In other words, right over here. So here's the pattern. And number 2, here's the pattern. And remember, some of you, instead of a black and white real body, you might have green, which is it's like a white real body, and red, which is like a black real body. So here's the opening and here's the closing. Here's the opening and here's the closing. So that's the first question. Next question, which is a better short sale trade at 1 or 2? And by the way, there's a Forex market, and one of the great advantages of FX is it's as easy to short as it is to go long. So what you can do is put the player on pause, think about this, and then hear my answer. Okay, so welcome back. 1 and 2 are both the same candlestick signal. It's a red real body that gets more than halfway into a green real body, and that is a dark cloud cover. Remember, if the red real body wrapped around the green candles, like here and here, then it would be a bearish engulfing pattern. So these are both dark cloud covers. Now, one of the valuable aspects you get in our more detailed education is not only being able to recognize the candlestick signal, but what you do with that candlestick signal. We have a concept called candles in context. In other words, looking at the candlestick's signal through the prism of the overall market. And that is really something that separates us from the competition. There's a lot of information about candlesticks out there, but unfortunately, a lot of it is wrong. You know, they'll say, hey, you see a candlestick signal, you should be buying or selling, and that's a great way to lose a lot of money. So let's look at this. Which is a better short sale at 1 or 2? And let's assume we have a target over here. So once again, you can put the player control on pause, and then hear my answer. Now, one of our core concepts, you know, we emphasize looking at candlesticks, confirming support or resistance. So here we have a dark cloud cover, confirming resistance at a doji. So that's good. But the next aspect is looking at the risk reward of the trade. So based on that risk reward, which is the better short, 1 or 2? That, you know, the risk reward aspect gives you a little hint. So let's look at this. If you short on this dark cloud cover, remember you have to wait for a close. This is your risk. You should have a stop above the high of the dark cloud cover. And look at the target. So that is really less than a 1-to-1 risk reward. In my opinion, that is not a good trade. Now let's look at the other dark cloud cover. Now a nice thing about the dark cloud cover here, it's also confirming resistance, as the first one is. But let's look at it from a risk reward perspective. If you sell here, your stop is above the high of the dark cloud cover over here. Maybe you want to give it a little bit of leeway, maybe make it up here. And your target is still the support here. That is a much better risk reward. So the correct answer to this is what patterns are at 1 and 2, obviously dark cloud covers. And the more important thing for your trading strategy is which is the better short, 1 or 2. And based on risk reward, the answer is 2. Okay, thanks for joining me.